In today's video, we're going to talk about the possibilities of a significant correction coming up for the euro versus the yen, despite the significant rally we've seen for years. We're also going to take a look at the yen futures to show you why I think we could see some relief for the yen over the coming weeks. All right, so kicking off here with the euro yen with the weekly time frame, we have a lot to discuss here in this video. So first, I want to start here with the weekly time frame and show you the uptrend that has been intact ever since early 2022. Now, it technically goes back all the way to 2020, but really this is when the more aggressive rally started for the euro versus the yen. So if we drop down to the daily time frame, what you're going to notice is that this week did actually break above the top of this channel. Okay, so you can see that off of the closing price on the daily time frame from back here in 2022, we've got this low here. We've also got this high and this one. Now, currently, the market, as I said, is trading above the top of this channel. So you can see where we got the close above here on Tuesday, and Wednesday found support right there at that level. And so far today, it does look like the market is going to close above this level, which comes in at 163. So that's going to be the level to watch. Everything I discussed in this video with regard to a correction for this market is going to hinge on 163. So as long as it's above this, right, you got to be really careful trying to short this. In fact, shorts are unfavorable while above 163, just because the breakout that we've seen so far this week is intact while above that level. Now, the reason that this level down here, 163, is so significant is because, again, that's the top of that channel. So a sustained break back below this would confirm that this up here is a fake out. And as many of you know who've been watching these videos for a while, a fake out like this up here, if it were to confirm, right, a fake out like that could send this market lower back toward levels like 160. And there's no shortage of liquidity and inefficiencies for this market to target if we do get a correction, because what you'll notice here on the weekly chart is that anytime you get a big green candle, okay, odds are that candle does fill over the coming weeks. And the reason for that is because this right here is an inefficiency. And liquidity builds up in these areas, and you can see where this wick right here filled in most of this big green candle back here. Same thing right here on this candle. Obviously, this candle got filled as well, but this big green candle right here got filled and then some on this wick. And you can see once again here, big green candle, partial fill. However, over the past 3 weeks, what we've seen is the euro yen moving higher, carving out inefficiency after inefficiency with absolutely no fill. Okay, so we've got inefficiencies down here, this candle, as well as the current weekly candle. So there is no shortage of liquidity to be had if we do get that correction. Now let's talk for a minute here about 164.30. So this highest level that you see here, which is today's high as well, if we go to the monthly time frame, and this is really, really interesting. So if we go all the way back here to 2008, this is the financial crisis. So this was a huge move. Again, we're on the monthly time frame. So these monthly candles right here represent a considerable amount of pips. So this monthly candle right here was nearly 1,000 pips. Now, this level, okay, 164.30, this, again, this is today's high. And what's really interesting about this is you'll notice that from the high of this candle, and this was the first big red month during the 2008 financial crisis. So if we look here and draw out our fibs, you'll notice that the 50%, okay, right here, this green level intersects right there with 164.30. Okay, so that's the 50% retrace of that big monthly candle. Now, remember what I just said about large candles like this creating inefficiencies and eventually getting filled. So what you'll see here is this big red candle got partially filled immediately, got filled in even more through here. These two monthly candles from that financial crisis were not filled, okay, until all the way over here. So this is now today's high. This is now a 50% retrace of that first big red month in 2008. All right, so really, really interesting stuff here from the euro yen. And it kind of solidifies too that we could see that correction from this market if we do get that sustained break below 163. Now, looking more short term, all right, let's take a look at this here on the daily and 4-hour time frames, and then we'll get into yen futures. And by the way, guys, if you do want to join our VIP group, we talk about this stuff all day long. I'll put a link at the top of this video Right now, I have monthly, quarterly, and lifetime plans, 30% off. The course is launching next month, so if you join today, you will lock in that 30% off rate. The course launches next month. We also have daily videos on 5 to 10 different markets, exclusive charts, and my trades in real time. So you'll be able to see my trades, entry, stop loss, and target. Okay, so here in the daily time frame, you can see where I have this level marked out at 163.80. Okay, so 163.82 exactly. This is the high from Tuesday. Okay, so this is the high from that breakout candle that closed above the top of that channel. Now, if you'll notice, if we go here to the 4-hour time frame, what you're going to notice is that we have a pivot right through this area where we had the high from back here. Okay, this served as resistance. We got the breakout on this candle. The market found support here at this level. And now today so far has closed back below. Okay, so this level now flips to resistance. So what we could see here over the next few days, potentially even on Friday, is if the euro yen does close above 163 today, potentially some consolidation above that mark. Okay, so something like this, if we just have to draw it out. Now, there's no guarantee that this will happen, guys. I don't know where this market's going to go, but I think that the ideal scenario for a short here would look something like this, where we get the close above 163 today, okay, signifying the market is still holding above the top of that long-term channel. And then we get something like this, where tomorrow on Friday, we come up here, test this level, maybe consolidate here a little bit, and then break down. Now, this price action through here, okay, is what's going to be required in order to confirm the short setup, right? Because again, any shorts up here in this area are risky while the market's above that 163 level, okay? But if we do get a sustained break below 163, whether it be on Friday or ideally next week, just because, breakdowns on Fridays, you don't necessarily want to be entering in positions before the weekend. And so something next week below 163, I think could be really interesting toward that 160 handle. Okay, so again, no guarantees that this sets up. I don't know where this market's going to go. Nobody does. But I think something like that would be ideal to play the downside, right? And look for those inefficiencies that I talked about down toward levels like 160, because, notice how this level back here was never really tested. The market got really choppy through here, but we haven't seen a rounded retest through here. And again, there are a ton of inefficiencies that have developed through this area here. Okay, so let's go ahead and take a look at yen futures to wrap up here. And something like this kind of helps to solidify what we just talked about on the euro yen. So obviously, the Japanese yen has been in a downtrend for a very long time. Significantly from the high back here in early 2023. However, longer term, if you look at the weekly time frame, really the market has been in a downtrend ever since back here in late 2020. Okay, so, take everything here with a grain of salt as far as relief for the yen, just because it's been a very weak currency. With that said, though, we saw something very significant this week, and this is why we're seeing a lot of the yen crosses start to rotate lower today because of that yen strength. So if you'll notice back here, this low was the low from 2022. So this is a yearly low. And notice what happened this week. We got a sweep of that level. And so far, the market is coming off this. The yen is coming off of this level. So if we see something like this over the coming days and weeks, that would represent yen strength. In which case, pairs like the euro yen, right, especially if it gets below 163, in my opinion, would be prime targets for shorts. Okay, now the first step here for the yen is going to be a higher high, because so far, what you're going to notice is that this market has been putting in lower highs and lower lows this entire time, right? So we have yet to see a higher high within this downtrend. So that's going to be step number one. And, again, the market's coming off a very significant level down here at the 2022 low. We saw the sweep there this week. So I do think that the scenario is set for potential yen relief. However, again, we do need to see it start taking out levels like these two highs back here, right? Start to take out those highs, get some higher highs and some higher lows developed here over the coming days and weeks. And I think that we have a setup to start looking for shorts on those yen crosses. Okay, so all things to keep in mind when you're looking at a pair like the euro yen. And just going out here to the weekly time frame, one last thing too, obviously we have this triangle pattern that's developed. So this could be long-term bearish. However, do not discount the potential for something like this over the coming 1 to 2 months. And something like that, right, very similar to what we saw back here, this rally that lasted about 2 months, something like this would be a significant move for the yen. So even if this ends up being long-term bearish, right, for the yen, this rally right here, this portion could be something to pay attention to because again, this is the weekly time frame. So that kind of move could take, 4 to 6 weeks to play out. All right, so just kind of wrapping up, guys. Right now, the yen, the euro yen is obviously in an uptrend. This is not something where you want to go short the market up here in this area. I think 163.80 is something to watch on Friday, potentially next week, just given the fact that we did see or are seeing a bearish engulfing candle develop here. Now, if the market were to close today above yesterday's open, then it wouldn't be a bearish engulfing candle. But essentially, if we get today's candle closing below 163.60, then it is technically a bearish engulfing candle, in which case I'll be looking to this level up here around 163.80, and then potentially that sustained break below 163. But again, just be careful here. The market is in an uptrend. It's technically holding above 163, and alternatively, a sustained break above 164.30 would negate or at least delay any kind of potential for a correction from the euro yen. All right, that's it for today's video. I hope it was helpful. Once again, be sure to join us in VIP. Get 30% off monthly, quarterly, and lifetime subscriptions. See the link in the description of this video for details. Trade well this week, and I will talk to you again tomorrow.